Tyler at Maltbie. This is Maltbie's Minute on the Market. It's the election edition, nearly on the eve of the election of 2020. We're going to go over a predictor, an indicator that has got a 70% accuracy. It's not what you expect. It's close to what you expect, but it isn't. So we're going to jump into that, and then of course we'll update you on our market indicators and our stock of the month. Here goes. Looking at post-war elections, we've seen that the incumbent with a stock market that's up in that year is hard to beat, very hard to beat. We see that this has occurred. Here are the exceptions, and there's a good reason why there was an exception. 1976 was Nixon and Watergate. The market was up 19%. 1980 was Carter in the Iran hostage crisis. The market was up 25%, but that was it. Reagan won in a big victory there. And that takes us up through 1992. And in 1992, we had an election between Bush the Elder and William Clinton, right here, William Clinton. And to make it authentic, I've got a prop. Bill Clinton, 1992, he prevailed even though the market was up. So the aberration here was you had a third-party candidate, Ross Perot, that siphoned off enough votes for Clinton to win. Clinton had 43% of the popular vote, Bush 37, and Perot had 19. He was taking the approach that mainly hurt Bush about to have that great sucking sound avoided. So keep jobs at home and balance the budget and read my lips, George the Elder. It cost him dearly. That was 1992. Moving up, Clinton won, of course, in 96, and the market was up pretty nicely that year. And into the year 2000, very another aberration type of year, you would think. And that was a year where we had Bush W. When the equity market, the S&P, was down, actually down 9% as the dot-com bubble burst, even though the economy still is showing strength, up 5%. The Ralph Nader also hurt Gore, but essentially it was the hanging chads, 537 of them that fell in the favor of George W., and the Supreme Court ruled him in the year 2000. Again, in line with our theory about the market being the prime element that determines the election. And we move towards 2008 and the Great Recession. We had a 37% down market. So as you might expect, the incumbents, the Republicans, were out, and they were out, and you won't lose your doctor. That was the Great Recession in 2008. The S&P was down 37%. GDP also was eking down at the time. So it was a very tough year, and a year where the electorate wanted change. George W. was very unpopular as well with the Iraq War. Okay, that takes us into the contemporary tense. 2016. 2016, the incumbent represented by Hillary Clinton lost due to the huge unpopularity of Hillary Clinton. As you may recall, her first foray into politics was to usher in a new healthcare plan in 1992, and it was costly. It cost the Democrats a lot in the polls and in the midterm elections, and gave the impetus to the contract with America and Newt Gingrich. A little bit of history there. As we move to today, we're looking at a market with our theory that's up 4%. We're looking at a GDP quarter reported over 33%, but the market is the key indicator, up 4%. Backing that up, looking for Donald Trump to be reelected are these data inputs. 59% of those polled feel they are better off than 4 years ago. Trump's job approval rating equals Obama's in the year 2012 at 52%. So the data, the inputs objectively, historically, with a 70% ratio of support since the post-war, do support Donald Trump winning the election. Now, what about the market? That would imply it would be an up year. We think it will be. However, at this point, we're looking at a mild correction based on our data indicators. Our indicators are showing a market sentiment that has been too bullish, a little bit speculation, a little bit high levels of margin. Technical indicators, however, are strong underpinning. Most major indices are above their moving averages. Advancing issues outnumber declines by 1.74 to 1. The other important indicators that go into the mix are mixed. Liquidity is negative. We're seeing cash flowing out, bracing for a tough election battle. About $40 billion flowing out of equities into bonds. Now we get to the important indicator here of the Fed and valuations. The valuation indicator is negative. We see a market trading probably at a level that's 5-10% overvalued based on normalized PE ratios and earnings multipliers. But it is supported by the fact that equities are very attractive and the earnings yield exceeds the corporate bond yield by a very nice margin. And finally, our monetary indicators remain positive, even though we don't have that second stimulus that's caught up in Congress right now. We're seeing that the Fed has been stepping on the gas and the administration has turned on the fiscal spigot to get us through, and we just posted GDP numbers showing an up 33% quarter. Now to our stock of the month. It is esports, symbol GMBL, about $4.50 a share. It is a microcap. It is well positioned in newly public. It offers the most versatile and transparent wagering platform in the esports gaming market. These are the video gamers. They want their fun too, and they want to gamble on that. We feel this has got very good upside over the long term. We feel it should trade up as high as 7. It's currently at 4.5 in the next 12 to 18 months. And it's really supported by a growing high growth fan base that's expected to reach 590 million, or nearly double in the next several years. Gross revenues now at 3.6 billion are headed, industry experts see that tripling. The company added UK and Irish gambling licenses and their first US license in August. Esports has a good amount of cash. They just made another acquisition to expand their presence, and we feel this industry and this company have a lot of growth potential. So come to our website at singularresearch.com. Sign up for our 2-week complimentary trial. Pull down some of our recent recommendations. In the last month, we've had some nice upside from a company called Good Natured Products, a nano cap that has doubled. It's just catching up to Beyond Meats, which we launched on, and that's about an $8 billion company, and in the plant-based food industry that is doing very, very well. So soon we'll know. We've given you our call on the market and equities and the election. I'm Robert Maltbie. This is Maltbie's Minute on the Market.